Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello everyone, hope you had as fun a day as we did on Fed Yellen Day. Certainly tons of volatility and trading opportunities out there. So SPY on the daily time frame, then I'll go in and zoom into the 5-minute chart to point some key things out that I was pointing out live on webcam. 50-day moving average resistance 215.89. We closed just below it. We did gain that 10-day moving average as support. We gained the middle Bollinger Band as support, and 215.94. We broke that, and we're now filling the gap. The gap fills at 217.05. Very significant bullish day. Spike in volume on the verge. I won't say on the verge, but closing in on a bullish MACD cross. And there's not a whole lot of resistance after this 50-day moving average until we fill that gap up at 217. The bulls are in absolute full control. The RSI is crossing 50 to the upside. Weekly time frame needs to close the week above 215.90. Otherwise, it'll be a second rejection in a row on the back test. The bulls really don't want to see that happen, so that's the key goal over the next 2 days. Let's now look at SPY on the 5-minute time frame. Excuse me. There were some really nice indications here, and I'm just going to be covering after the Fed began talking. So we got an initial bullish reaction, and that was very clear, and then we had a big pullback. Now, what stood out to me was the bull volume on 15 minutes of upside certainly outweighed the bear volume on 15 minutes of downside. We held the 20 period and 200 period moving average support and formed a higher low. So what I was looking for after this consolidation was a break of the lower high pattern. 4 lower highs in a row, tightening range. That occurred on this candlestick on an increase in bullish volume. That was bull signal number 1. If you were not confident, and that's what I'm pointing out here, there were plenty of signals after the initial reaction. You don't need to be rushing and filling out your orders and making decisions in the first 2 minutes after the move starts. You can wait for the consolidation. What I was pointing out that stood out to me, normally after you see a breakout and then a pullback like that, you see what I call an equilibrium being reached, where we have our higher low, a move, a lower high, and then a pullback and a higher low. As soon as we set that lower high and didn't break this exponential support, you can see initially we fell right through it and bounced off other support. But once we did not break that level of support, that told me something's up. The bulls are showing some strength. I was watching gold doing the exact same thing, and gold was pulling back more significantly, fitting that pattern of reaching an equilibrium. So I noted that SPY was not doing it. Seemed like the bulls were holding on strong. There's your confirmation of the bullish action. Big spike in volume, big price action move. Look at that strength into the end of the day. Up here with these upper wicks, I was saying, let's get ready for some puts. We have some key hourly resistance. We have the middle Bollinger Band daily resistance here. But as long as that 4-period exponential is support, I don't want to be betting against this market. And fortunately, we never got that bear signal, and we continued to the upside, closing extremely strong. So you could have waited until right here on this candlestick, 1 whole hour after the initial reaction to the Fed, and made huge gains at the end of the day. And if you haven't noticed, option players out there, we have now 3 weekly expiration dates. Options for SPY and SPX expire on Monday, Wednesday, and Friday. So big time gains can be had on expiration day on any of those days. So you need to be aware of which expiration you're choosing, obviously, as now there's more options. Pun intended. So looking at the hourly, we did get over all moving average resistance levels on the hourly. And let's zoom out and look at this clear break. 5-day hourly pattern, higher lows, lower highs. This is the equilibrium I was talking about on the 5-minute. Obviously, it didn't play out on the 5-minute, but here it is on the hourly. Tighter, tighter, tighter. There's your bull break right there. Pull back and then follow through. So that little bull break couldn't give too much confidence in that move because it was obviously before the Fed and we didn't know what was going to be said. But the big follow-through confirmation, all moving averages going into support, bulls in full control heading into tomorrow. We're having a ton of fun in the chat room. I suggest you check it out for a free week. I'd love to meet you. I appreciate you watching, appreciate the likes and the shares. All is great. Have a great night.